I have Tyler and Mike from Energy are here. I started a conversation with Tyler a little while ago. We have had energy investments. We're in Texas, so this is always this big energy state. There's a lot of oil and gas people here, but also there's a lot of renewables as well. So we've had some energy customers come our way, and we've had a lot of people ask, hey, I see some oil and gas stuff. I'd love to see some more green energy investments, more stuff in renewables. So Tyler and I got started talking. They said, hey, they've handled self-directed IRAs before. They've handled different renewables projects, and their team has a lot of great experience. So I brought Mike and Tyler in here today to talk about their experience about Energia, projects that they've done before, projects they're doing in the future, kind of really educate how renewables can really be added to your portfolio. And the theme today is to make your portfolio a little bit resistant to some of these pressures that we're seeing here today, whether that's climate change, different policies from investment companies. We see companies like BlackRock changing their investment standards every day, and that moves trillions and trillions and trillions of dollars. I live with a few oil guys, geologists here in Texas, and they have to talk about that every day. People are asking about it. People ask their investors about it. So just know that these pressures are out there, whether people are in the oil and gas sector or they're purely in the renewable space. So with that, Tyler and Mike, I'd love you to introduce yourselves and take it away here.
Thanks, Brendan. And first of all, just wanted to say thank you to Rocket Dollar for inviting us today to come and speak on this topic. The topic is really about how to incorporate renewable energy into your investment strategy. And I think for a lot of people, renewable energy is a bit mystical, and not many people are familiar with how this asset class works. So our goal here is to share some of the ways that we invest in renewable energy with you, so that you might consider adding renewable energy to your personal investment strategy with a greater degree of comfort. Couple disclaimers, webinar technology is still evolving. We're on Zoom here today. We do use video as a medium quite a bit in our communications. Gives us an opportunity to hone our message and to provide visuals that help explain. But if folks on the meeting here are having a hard time seeing the videos, or if the internet is a little choppy for you, please just let us know and we'll revert towards a more standard format. And also, to the extent you have questions, we're a small group today. We would be happy to answer questions after any particular slide. So don't feel the need to wait to the end. We're happy to turn this into a discussion type of webinar here, to the extent that anybody wants us to drill down on any of the content of a particular slide. So thanks for that.
Yeah, for any video that Energia presents today, we'll throw a link in the YouTube description at the bottom. And then you can get the full high def experience as well.
Thanks, Brendan. So my name is Mike Silvestrini. I'm a managing partner and one of the co-founders of Energia. I've been in the renewable energy industry for the last 15 years. I started a company called Green Skies in 2007 and grew it to become the largest, at the time we exited, the largest commercial and industrial solar company in the US. We had around 450 solar energy projects for customers like Target and Amazon and Walmart. And we were there in the early stages of the evolution of this industry. And I hope to be able to share some of those experiences with you today.
Awesome. Thanks, Mike. My name is Tyler Hurlbert. I am a former licensed financial advisor. So I spent 20 years at really large Fortune 500 firms such as Ameriprise, Prudential, Wells Fargo, and TIAA, really as a wealth manager. So mitigating risk, setting up portfolios, financial planning. And I noticed a trend happening over the last 5 years in particular. We kind of are entering into this awareness decade where, clients and investment managers are becoming more and more concerned with not only the performance of an asset, but also the environmental performance and the impact that investment is having on the world at large. So noticing that and kind of seeing a personal shift for myself, I decided to join Energia in 2020. And I'm super, super excited about the mission and what we're up to here at Energia. I really, really believe, we are on to something big. Here, I want to share with you guys a video, and bear with me as I'm going to stop our share and pull up the video here. But I wanted to share with you guys a video that just kind of gets into a little bit of the why, what's happening, kind of within Energia, and kind of, how we go about things in terms of making decisions on a daily basis, and what that looks like.
We are not on track to control global warming before it has a devastating financial, environmental, and human cost. But we can manage our atmosphere in a way that maintains comfortable living conditions on Earth by managing our own greenhouse gas emissions. One of the most vetted sources of climate information is the International Panel on Climate Change. In 2018, close to 40 different climate models from different scientific groups around the world were analyzed to create new data. The newest report states that to limit the effects of global warming to 1.5 degrees above pre-industrial levels, we can't emit more than 580 gigatons of carbon dioxide between now and carbon neutrality. We are already over 1 degree above pre-industrial levels and are emitting 50 gigatons of carbon dioxide every year. We need to reduce those emissions to zero before spending the 580 gigaton budget. Combined, new wind and solar installed in 2018 resulted in an overall carbon reduction of 0.21 gigatons per year. At this rate, we would burn through our 580 gigaton budget by 2031. Many technologies and behaviors will need to work in concert to achieve this daunting objective, but wind and solar energy are the most scalable and immediately available options. To install enough wind and solar energy to offset our carbon emissions before spending our carbon budget, we need to invest 4 times as much in these technologies per year and sustain that investment level through 2045. Using the current cost of renewable projects, it will cost approximately $1.4 trillion globally per year to achieve carbon neutrality in time. Big institutions have promised to increase their investments in renewable energy, and we hope they follow through. But will it be enough? Will it be in time? Do we leave this problem to chance? Independent investors, who wield the majority of American wealth, can choose to address the problem of climate change. Not only are renewable energy investments necessary to protect our climate future, they can be productive investments that help individuals create wealth and protect their financial future. Energia created an investment platform so that every American can contribute to this objective. We are all responsible to future generations to address climate change, and we're running out of time. We're emitting greenhouse gases at an unsustainable rate, but we have the ability to do much more. Log in and own your piece of a carbon-free world.
All right, so just bear with me as I kind of get back to our deck here. So everybody with me? Mike, you got the deck? We're back?
We can see it.
All right, good. So hopefully that was pretty good. Like I said, we'll share these videos with you separately as well as we move forward. But Brendan mentioned at the beginning of this BlackRock, and it's kind of fitting. I'm not sure if he saw this deck before, but I wanted to just take a quick second and read this quote from Larry Fink, the CEO of BlackRock. This was in a letter to CEOs that he puts out every year. And he says, "Today we're on the cusp of another transformation. Better technology and data are enabling asset managers to offer customized index portfolios to a much broader group of people, another capability once reserved for the largest investors. As more and more investors choose to tilt their investments towards sustainability-focused companies, the tectonic shift we are seeing will accelerate further. So clearly, large institutions are behind this, and we've really made a big push, and we'll continue to make that big push.
And just Tyler, a brief story of why this brought this up is I used to do 401k education to people, and I was an advisor, and we worked with Fidelity, ADP, you name it, every single 401k platform. And we had some customers on ADP, and there was one, a couple key employees that say, hey, we want to add some type of environmentally responsible fund or a couple different options that really speak to that. And I just basically had to tell them, I'm sorry, we have this one fund. It's really expensive. It's not really a great option. And, the fees are awful. The performance, it was just not a great, well done fund. It was kind of an ADP's like back burner somewhere. And that was it. And they're saying, this is it. This is all you've got to offer. And then one of those employees kind of mentioned Larry at BlackRock. And, that was hitting news wires at the time, all his big statements he was making.
Yeah. And Brendan, I don't know if you can kind of unmute the line. Like I said, we have a pretty manageable group here. So usually at this point, we'll do a poll. But since we got a smaller group today, why don't we open this up to everyone here? I got a list of companies. So is that possible to do, Brendan?
We can maybe do a poll. The chat might be the easiest way to do it. Maybe people can raise their hand. I can ask everyone to unmute. I've never done it before, so I just don't want some chaos I'm not ready for. But
let's bring on the chaos. A little bit of chaos is good here. So everybody unmute for just a second, if you could.
And, let's do our question, and then I'll go hit the unmute here.
So the question I have for the group is, what do these 10 companies have in common?
All right, and
I'm open to any and all answers that you guys might have.
They're all American businesses.
You can pop in the chat as well if you're a little shy. Take a stab that they're all in the same fund of some kind, an ESG fund. That's my best guess.
So these are all obviously extremely large cap companies, mega cap companies, US based companies. The other thing that I thought was really, really interesting is that they're all part of Vanguard's US ESG stock ETF. They're the top 10 holdings in that fund. Mm-hmm. So, in recent years, there's been this groundswell of interest in ESG investing. That stands for environmental, social, and governance. And as customers and consumers start to kind of wake up, and the investment community starts to wake up, more and more people are interested in companies that are doing well and making an impact on the environment and the world we live in. However, as you can see, I think from this list of companies, there's a lot to be desired when it comes to, what constitutes an ESG investment. So the two main ways that ESG is measured these days is either by a best-in-class approach. So you have, hey, who's doing the best in their respective industry towards these measures. You also have an exclusionary approach where a fund manager might just eliminate a gun manufacturer or tobacco, big tobacco or firearms, those kinds of things. But there's really no set standard for measuring the impact of an investment and kind of the ESG nature. And when I look at these 10 companies, that's not the first thing that pops to my mind. They're really large, they're US companies, they're pillars of kind of American business, but I don't get this overwhelming sense of strong environmental or social governance policies when I think of Apple or Amazon or Visa or Google or Facebook for that matter, really across the board. So I think the important part of kind of showing this slide is to let you know that we're excited at Energia that there's an interest in ESG investing and that people are starting to awaken to the fact that we need to consider the environmental and social impact of an investment, but it's not always true impact investing. And I think what we want to do right now is we want to turn it over to Mike, who is an expert in this field, to talk about how you can invest in true renewable energy investments that are, 100% an impact investment, where you can measure the carbon that you're saving from the atmosphere. You can kind of, measure those tangible benefits as we kind of move forward.
Thanks, Tyler. Yeah, so again, we're not talking about ESG at Energia. We're talking about true climate mitigating technology, which is primarily in the form of renewable energy asset investments. Renewable energy asset investments are a great fit for a portfolio, and Tyler is going to explain how to view the cash flow and its purpose and role in a portfolio. But we wanted to make a distinction between ESG investing and renewable energy investing. And as our video showed, we need a lot more renewable energy investing, and we need it fast. And we did about $300 billion last year in renewable energy asset development worldwide. Impressive number compared to most industries, but nowhere near enough to manage our carbon output in time for there to not be significant climatological problems. So we wanted to explain to you guys a typical structure of what it is to invest in renewable energy. This is our structure, and there's a couple of points I'll make to start off here. There's 3 different scales of solar energy. You have residential scale, commercial and industrial scale, and utility scale. Utility scale is really best done by institutional banks. We're talking about true infrastructure investing. Yields tend to be in the 3 to 4% range, and offshore wind, all the stuff in Brendan's state of Texas, which is huge solar farms. Those are excellent infrastructure class assets, but a very difficult place for retail investors to play. And the yields are, again, unimpressive. When you see a yield co, publicly traded collection of projects, which is actually a company online, that's going to be mostly holding large scale utility scale projects. But residential stuff is executed by corporates. So you can invest in a company like Sunrun, who would install solar panels on homes, but very difficult to invest in the asset. And at Energia, we don't really like owning the company and the management decisions and the waste that may be going on at the corporate operating expense level. We're more interested in owning projects. And the flavor that is best for the retail investor is really the distributed generation scale, or that middle market. And that's what we specialize in. So if we understand that we're talking about projects that range from sort of a commercial rooftop building up to maybe a 100-acre solar power farm, something in that type of range, you're going to have higher yield in that segment than you would get in the utility scale, but it congregates better and has better economics than the residential scale stuff. So we really like the distributed generation scale segment. And because these projects are relatively small, they range from $500,000 to about $10 million per asset. What you'll commonly see in investment architecture like ours is that projects are aggregated into portfolios. So if you can see those gray boxes there, those are Delaware companies that own a series of projects that are in line with the investment theme. You have a lot of different policies, a lot of different markets. So you want to know what you're investing in. You want to diversify, but you want to make sure that you understand the different investment classes within the DG segment. And then those portfolio companies own other companies which are single purpose entities, much like real estate. Each company is an LLC, and those own one project. They have no employees. There's no operating expense that we have to risk here. We are essentially owning direct equity into the renewable energy asset itself. And since there's no employees, the community solar portfolio entity would hire a company like Energia Global to serve as its manager with transparent fee structures. So that's really the type of architecture we're looking for, where we can get the investor as close as possible to the cash flow of the project without polluting that cash flow with a corporate company anywhere in the stream of cash. So now we're going to dig deeper into one of these portfolios a little bit, and let's drill down into a particular project. So what's under the hood of a solar project? This could be a wind project. This could be biogas. This could be a battery storage project, and they pretty much all have the same archetype underneath. Starting at sort of 11 o'clock here, the most important thing is the energy buyer. This is the credit that underwrites our cash flow. It's just like a lease for a piece of real estate. The building is worth something, but it's really the lease of who's renting that building that we hedge our bets on. And it's the same thing for a power project. We sign 15 or 20, sometimes 25-year contracts, which is called a take or pay contract. So whatever electricity is produced by the project company is automatically bought by the energy buyer. There are stiff penalties for the energy buyer to break that contract, and we look at the credibility of that buyer very closely when we decide if we like an investment. There's a variety of different contract styles to sell that power: contract for differences, power purchase agreements, lease agreements, but they're all essentially the same thing. It's an effort to pre-sell the electricity before we invest in building the project. Second thing is going to be construction. EPC stands for engineering, procurement, and construction. This is where the bulk of our investments are going to go to. This is to acquire the equipment, whether it's wind turbines or solar modules, and to engineer and design the system, to perform the interconnection, and perform all the services necessary to bring the project to life. We generally, again, want to do business with large construction companies that have a strong balance sheet that can stand behind the meaning of the contract. Next, once we have an energy buyer and we have a construction contract in place, it's time to assign a long-term contract for asset management. Now, there's a couple types of asset management. There's sort of financial asset management, and then there's technical asset management. At a company like Energia, where we're a manager, we handle the financial asset management in-house, and then we'll often subcontract and manage an on-the-ground maintenance company. And this is a company that rolls a truck to the project site anytime there's any type of interference with the production of electricity. We only get paid when we produce electricity. So it's very important that what we call uptime, or a percentage of time that the plant is actively producing electricity, is held at a high specification. And then finally, maybe I should have started here. This is the site. This is really the beginnings of the project, where we identify a location. And this is such an interesting industry right now, because the world needs to pump trillions of dollars into renewable energy. We don't really have a better strategy right now for curbing carbon exhaust. And in order to do that, we're going to need many, many, many projects all over the world, and that takes up a lot of real estate. So there's a lot of activity right now in our industry to find the right locations, because we are tapping directly onto the electric grid, and that's called interconnection. And there's only so many interconnectable spots for power plants of this size. So that's kind of a land grab right now to go and acquire and locate those locations where we can easily tie plants to the project. And we're also looking at the quality of the site in terms of its permittability, its environmental impact. Can agriculture be dual purposed? You're seeing a lot more of that. We call it agrovoltaics. So some interesting things happening on the site. But essentially, those are the components of a renewable energy project. And for anybody who's ever developed a piece of real estate, it should look a pretty similar list. Our industry definitely picked the pocket of the real estate industry, from everything from contractual structure to the types of arrangements we have with customers. So when do we invest? This is an important question. And if you encounter an opportunity to invest in renewable energy, you'll want to know. Essentially, you get paid a premium for being in earlier. The farther behind the project is, the higher your return should be. But at Energia, we chose not to ever invest in a project prior to a certain status called notice to proceed, or ready to invest. And this is the moment at which an asset is congealing and is becoming valuable. this is a good time for us to put some capital to work. At this point in time, we have the single purpose entity is created, it's structured right, can pay its taxes. We have the site, as I just went through. The interconnection with the utility company is contracted. It's very important. Utilities don't like losing customers. Interconnection can be a point of conflict with certain utilities throughout the world. We want to make sure that that is beyond the shadow of a doubt. We have the right to deliver our electricity to that grid. We want to make sure we're permitted, and there's a variety of different permitting circumstances, state by state, country by country. Make sure that customer power contract is in place. We're going to make sure that the equipment is top quality. That's an important thing too. In the early stage days of solar, we had all sorts of equipment related problems. There was one year in 2014, I think it was the year of the polar vortex. If you remember that, in New England, we had 460 inverters that needed to be replaced because it was the early days of what we call string inverters. Well, good news is, that tech has been figured out, and we're seeing fewer and fewer issues in our assets than ever before. So certainly the technology has come a very long way. And in fact, now we're pushing the envelope to include battery storage in many of the projects that we develop. We got to make sure that the contractor is the right guy to build the thing, whether that's warranties, equipment selection, do they have the skilled labor? Can they stand behind the contract? And then lastly, we're going to pre-sign before we dig a hole or buy one thing. We're going to make sure that all the energy is sold, that the price to build it is fixed, and that the price to maintain it is fixed. And once we have that, we have a scenario where we are pretty certain about the cash flow from the asset. We can estimate the electrical production, which is something that's very articulate these days. We can estimate what the cost is to build it, and we know what the revenue will be to us as owners. And that describes our return. So this is an example of a portfolio that we developed in Brazil, which happens to be probably the hottest market in the world right now for renewable energy. We're very excited about Brazil. Should be a market leader in Brazil by the end of the year. And this is a portfolio as done by Energia.
Community solar is a way to develop solar projects that makes economic sense for all stakeholders, from small businesses and homeowners to the utility companies and the project investors. It's a popular policy in markets that are developing resilient, carbon-free energy systems. There's an excellent example of community solar working in Minas Gerais, Brazil. Here, hundreds of thousands of homeowners and small businesses are subscribing to enjoy discounted energy produced by large nearby solar plants. It's a new way to look at home and small business solar, where the solar panels are installed on depleted agricultural land or the arid northeast part of the state instead of rooftops. Customers learn about the advantages of community solar through our marketing partnerships, such as the National League soccer team in Minas Gerais, Cruzeiro Football Club. Once aware of this cost-saving green energy, they self-enroll online. The benefit of community solar is a privilege of customers that abide by a subscription agreement. We can replace any defaulting customer with another subscriber who wishes to save 10 to 20% on electricity costs just by signing up. So, a community of U.S. investors can partner with a community of Brazilian energy users in a common effort to combat climate change. A poignant reminder that we're all members of one community. Own your piece of a carbon-free world.
So that's a type of product that we would put together in a portfolio, and then we would issue securities, which are using Regulation A through the SEC, in that portfolio to share through our online investment platform. let me hand it over to Tyler so he can talk a little bit about a broad scope of due diligence and portfolioization.
And one quick question, if I could just ask both you guys. So you said a
Sure.
little bit why you're so excited about Brazil. Can you explain a little bit? Some of that was in the video. What kind of factors are bubbling up that makes this so exciting and an interesting market right now?
You know, we have an entire video dedicated to the very last thing we're going to do is just show why we're so excited about Brazil. We have investments right now in the US, in Africa, soon to be Japan and Brazil. And, you know, having that global perspective and being in this industry for the last 15 years, you know, this is a whack-a-mole of a type of industry. Generally, you need an alignment of energy prices and policy and an addressable market. And there's these moments where a market becomes very high yielding, and that's where we want to be. But you have to be nimble, and you have to get there before that market gets hot. Again, not like unlike real estate, where if you get there when it's hot, you've already missed it. Solar is the same thing. Before the competition rolls in, we want to set up camp and gobble up premium deals. And then as cap rates compress, we move on to the next market.
Awesome, thank you.
Awesome, wonderful. And can you guys see, Mike? Can you see the deck? We're back to the deck.
Yes, due diligence.
Wonderful. So I want to share with you a couple things right now around just doing your due diligence on any of these renewable energy projects and what the risks are, what the benefits we feel like are, and then we'll talk a little bit about just the why behind alternative assets and then the growth there. So the first thing is, when you look at the risks associated with any of these renewable energy projects is, you have power production. So, renewable energy is, influenced by the weather. It can fluctuate. We call that intermittency. There's a rainy and a dry season with hydroelectric projects. When it's cloudy and the sun's not shining as bright, solar projects can suffer. So there is a risk there just in terms of, kind of the production of power. Also, you have customer default. Mike mentioned, we mentioned in the video, customers can default on their electric bill and not pay. We usually find that's the last thing to be defaulted upon, but it can happen. We do have the contractual right to replace customers from that consortium of energy buyers if they do default. You also could have.
Hey, Tyler, I'll just add to that. Sorry to interrupt you, but to put that into perspective, again, across my career, about $750 million worth of distributed generation renewable energy assets. We have never had a customer default. So it is definitely a risk to be aware of. And that's why we build these robust contracts where we have all sorts of options. We can replace the customer. We can pursue penalties. There's certain rights that we give ourselves. But fortunately, it is not an occurrence that we see plaguing our industry thus far.
Yeah. I mean, we've seen historically, across the industry about a default rate of about 1%. We've actually even modeled in, Mike, I think, correct me if I'm wrong, but I think we've modeled in a 5% default into our return projections, even though we fully don't anticipate that being the case. So you also could have a change of policy. Global energy policy is a moving target. Rules change, prices change, and policies can and will change. So it's something that, we're the experts, and it's our job to kind of stay out in front of that curve and make sure that we are, one step ahead of, global energy policy. And Mike mentioned the whack-a-mole. That's kind of what this is all about here, is trying to stay one step in front of those kinds of policy changes to take advantage of risk-adjusted returns. You also have exchange rate exposure. This is just for global portfolios. So anything not domiciled in the US, generally dividends are paid in the local currency and then converted to US dollars. So if there is a currency exchange rate exposure there, the opposite could also be true, however. In Brazil right now, the real to the dollar is at an all-time low. It's weak. And we certainly feel like over the life of a 15, 20-year project that could strengthen, and the opposite could be true. As far as the benefits to these projects go, they are long-term contracted dividends, and there's always inflation escalators built into them. So again, these are 15, 20, in some cases 25-year contracted dividends for a set purchase price of electricity adjusted for inflation. So it's very reliable, steady kind of yields that you're going to get from these types of investments. They're also a powerful hedge against equity and bond markets. Renewable energy projects, investing in this kind of infrastructure generally is non-correlated to U.S. Equity and bond markets. And with the growing talk about a market bubble and when that will come to an end, this is just a really nice way to hedge against some of those bets. They are real assets as well, to that same point. It's not paper investing. So, you've seen with AMC and GameStop, some of the issues and kind of counterparty risk that you can incur investing in these kind of paper markets. These are, it's steel in the ground, it's solar projects or hydroelectric projects around the world. And there is that kind of nice real asset component to it. And then last, but certainly not least, these are true impact investments. So like we talked about earlier with ESG, this is not some lip service, sustainability report that we're generating. These are true impact investments. For every, kilowatt or megawatt of power produced, we can measure, how much, carbon emissions that's, kind of saving, and, how much we're able to kind of offset that. So it is a true impact ESG investment. So with that, I wanted to talk a little bit about just kind of building portfolios in this new modern age. So this is from this graph, this data is from Seeking Alpha. The name of the article is "The 60/40 Portfolio is Dead." I don't know if I'm going to go that far, but certainly I think investors are starting to realize that they need to add some different sources of yield and different sources of return to their portfolios to kind of help build a more resilient overall portfolio. So if you look at this is projections, again, adjusted for inflation returns over the next 10 years from Seeking Alpha. US large cap stocks, a negative 4.7% return. Bonds, anywhere from -3 to -4%. Again, adjusted for inflation. So the question then becomes, with the stock market being, many would say a little bit overcooked and overbought, and bond yields at historically all-time lows with no end in sight. The question then becomes, well, where do people turn to try to, generate some new yield in these portfolios? And the answer, according to this graph, and I think a lot of people would agree, it's really alternative. This is from Preqin's annual Future of Alternatives reports from 2018. But basically what they did was they asked large-scale institutional investment managers, private equity, fund managers, the BlackRocks of the world, do you expect to increase or decrease your exposure to the following asset classes over the next 10 years? So your allocation is going to increase or decrease when it comes to infrastructure, real estate, private debt, private equity. And as you can see here, the resounding answer is that, these alternative asset classes are on the rise. So as we start to look for different sources of yield and the new yield, clearly infrastructure, real estate, private debt, private equity, and all alternative investments, even like Bitcoin and some of these cryptocurrencies that have become popular. It's just another asset class for investors to look to as they try to diversify out some of that risk that has built up over the years. So not only an asset you can feel good about, but certainly an asset you can, really generate some positive non-correlated yield from the investment community. And that's really where Energia kind of steps in and really at the core of what we do. If we're in the middle, our digital platforms in the center here, we take these renewable energy projects, these real asset infrastructure projects around the globe, and we connect the everyday retail investor to them. So we really believe in the democratization of this asset class and making it available to any and all investors, whether you're looking to invest $10,000 or $10 million, it really doesn't matter. We believe that everyone should have the ability to invest in this platform. And this is what the platform kind of looks like. So I would encourage every one of you, after we get off this call, just log into energia.com. You can just put in an email address, create a password, and you'll be able to, do your due diligence, view offering circulars, you'll be able to view project memos, look at all of our available inventory. what's to come. But whether that's on your laptop, desktop, mobile, the platform is kind of built for all of those areas. So it's kind of connecting you to these premium renewable energy projects. So with that, we wanted to share, Brendan, you had mentioned a question about Brazil and just why we think Brazil is really kind of an attractive market right now. It's really the place we went to first. We wanted to plant our flag there first. So we have a video here, one final video that I want to share with you guys.
Just for Rocket Dollar customers, right before we hit play here, that chart that Tyler showed very much resembles what I hear on the phone every day of different Rocket Dollar customers calling in, asking, what types of assets they want to get into. And that's both on the institutional side and people finding out that they can do that through a Rocket Dollar account, get their hands on much closer level to these types of assets.
Wonderful. Yeah, we couldn't agree more. Couldn't agree more.
Renewable energy markets come and go. One minute, they could be the best place to invest in the entire world. Then competition rolls in, policies change, and another market emerges. Right now, we believe the hottest market is Brazil. We expected it to be a perfect storm of policy, energy economics, foreign exchange, and customer adoption. And now it is. We predicted this circumstance and positioned our investors in some of the best projects in the country. We're offering them to you through our investment platform. For the first time ever, anyone can piggyback on Energia's investment strategy so we can build even more renewable energy as a community of investors. Log in and invest with us today.
So, I'll turn it over to Mike for a couple of points actually before we open it up for questions on Brazil as well. But really, it's just the perfect storm of, like we talked about there. For the last 20 years, Brazil has, for all intents and purposes, been frozen in ice. Their policy, they just haven't been able. You haven't been able to connect a solar project or a hydroelectric project to the grid until recently. That coupled with higher energy costs and a growing customer base, it's really kind of that last frontier where you can get mid-teens to upper teen returns, whereas if the same kind of solar project in the U.S., you might be looking at a 6, 7, 8% return. So I don't know, Mike, did you have any quick points on Brazil before we open up for questions?
Yeah, I mean, I think ultimately we view all the projects the same if we take into consideration the risk adjustment. Yes, there's a greater degree of risk going into emerging markets and places outside of the OECD nations, but the returns are significantly higher. And where we think we can mitigate those risks and enjoy those fatter yields, that's where we want to take our investors. We're not opposed to the US market at all. In fact, we're investing ourselves into a series of projects. We have about 80 megawatts worth of US based inventory here. But US is a particularly challenging market because it requires that investors have a certain type of tax efficiency. The way that we incentivize solar to offset the tariffs that we apply on the importation of modules is we provide a tax credit. But if you're not in a position to monetize that tax credit, it makes US-based renewable energy investing a little bit more challenging. We are working hard to solve for that so that our investors can have straight cash yield in the US market. But most other markets are straight cash yield today. And that's why we have interest in a true global portfolio. And I also want to add that I think Tyler and I and the whole crew at Energia are in the belief that inflation is a concern on the US dollar. There's been significant quantitative easing, and eventually that has to be paid for. And that's why we're interested in a diversified portfolio where we can blend together different currencies, different technologies, different markets, and put that together into a yield that's going to sustain for a long period of time. And that's why the global effort put forth by Energia here, and that's why the product is designed the way it's been designed.
Yeah.
Happy to answer any questions, guys. thanks very much for listening. I know that's a little bit like drinking from a fire hose, a lot of information there, but hopefully I can answer any questions you have about the projects themselves, the asset class, or Energia. Please let me know.
Yeah, and just one comment I had that I noticed is that structure that you guys use, you said that's been kind of tested in real estate. I've seen people in other asset classes even work with Rocket Dollar employing a similar structure for success. That's standard.
That's right. Yeah, because there's these other types of investments. If you were to go online, there's this company called NRG in 2014 under the CEO David Crane. They came up with the first yield co. And a yield co is a publicly traded portfolio of renewable energy projects. The only problem with the yield co is that there's a couple things that we don't like. Number one is that there's a corporate architecture on top of those projects. So it's not just owning the projects like at Energia. You're owning a company that owns projects, and that company makes decisions about how to spend your money. The second thing about that is that it is a paper transaction. At Energia, if we have $1 million project, we raise $1 million, we sell $1 million worth of securities, and then we close it up. It's done. We're not going to allow for additional stock to dilute initial investors on a particular portfolio. So we like that closed fund archetype, whereas a publicly traded yield co, anybody can buy as much as they want, regardless of what the yield is projected for that project. And if they oversell, it starts to dilute yield. And that's why you have yield cos averaging 3 to 4% worldwide right now. So that's a yield co product. This is a direct equity product, and we're not aware of any other way to get access to direct equity other than being in the business itself, like we are. But if you're not a developer or you don't know one, it's difficult for people to engage this asset class. And that's really what the whole purpose is of the platform, is to demystify that and give you access.
All right, we had a question from Doug pop in here. Tyler, can you see that?
Yeah, I'll go ahead and read it off. And Mike, if you want to take it, feel free. If you want me to take a stab at it, I will. For projects, would you consider not tapping into the existing grid? For example, a community where a project would provide electricity for the community itself. Perhaps community members own the project as part of their own land deeds, then license out the technology.
Yeah, so that's a question that has been asked in this industry since day one. Do we need the grid? The answer is, it's so much more, it's beneficial to us to have the grid. And because of the intermittency and the cost of batteries, when their grid is present, we want to be able to use that grid to transmit our electricity to our customer as efficiently as possible. It makes sense to tap onto the grid. That said, we have a huge interest.
Important call popped in. So if there's not a current question on there, I'd love, you guys have a lot of solar projects right now. Brazil has been big. What's your guys' experience of wind? Have you guys done wind projects recently in different areas through Energy?
Yeah, like I said, we have a market leading position in Brazil right now. We should be amongst the top 1 or 2 solar developers in distributed generation in Brazil by the end of the year. We have significant interests in the United States, mostly in Virginia. We have a deal coming with the historically Black colleges and universities, which is a consortium of 107 colleges and universities. We have some projects in the Northeast, Massachusetts and Connecticut. So yeah, we are active there. We have a portfolio that's launching in the next 30 to 45 days in Africa, primarily focused on South Africa through a partnership with a company called the Sun Exchange. In this case, they're developing the projects and we're investing into them as a group of investors here in the US. High yield stuff, extremely high credits. They have customers like Vodafone, which is the second largest telecom company in Africa. And we're also eyeing some project opportunities in Japan right now. But the list keeps going. And it's our job to follow these markets and study them and then make a decision. And we say no more often than we say yes. And, but those are the markets that we think right now would blend together to make an ideal renewable energy portfolio.
Great, thank you, Mike. All right, and any more questions? I'll just a few things about like the Rocket Dollar checkbook IRA. I have some slides, but we only have a few minutes here, so I don't need to bring it all up. But something important about the checkbook IRA is something that Tyler and Mike talked about at the beginning is when you get these big giant funds, Wall Street basically assembled the funds, and we were talking about the webinar today. They all have a little bit of philosophy, and they're all just kind of throwing a lot of stuff that's just in the S&P 500. Basically, it looks very similar to your S&P 500 fund, except like Tyler said, they'll cut out a few gun manufacturers. Same exact fund. With the checkbook control IRA, you get a lot more control. You get to closer to your investment. And this is something I hear for a lot of both environmentally or socially conscious investors is they like to be really picky. They like to specifically say no to certain companies and investments that they don't feel are doing the right thing. And that's what a checkbook IRA allows you to do. You don't have to rely as much on a big fund manager to make those decisions for you on your value set.
Yeah, that's great. That's so great, Brendan. And I would just encourage everyone here, we'll follow up if you have any questions specifically for us. But yeah, if you go to energia.com and again, just put in your email and create a password, then you'll be at that point, signed up. We'll send you a weekly email. We'll keep you in touch with new projects that are coming onto the site, new portfolios that are putting. We got a lot of stuff happening right now. So I encourage everyone to just go on to the website, energia.com, just create a user profile, and then that'll also allow you to start to do your due diligence and those kinds of things. It does look like we have one more question. I don't know if we can we take it, Brendan?
Yeah, go for it. We still got 5 minutes, and then we'll probably cut things off after that.
All right, so we got a question here coming in. Investment hold period, average ROI, and distribution structure.
Sure.
So yeah, go ahead, Mike, if you want to.
Yeah, so with regards to the hold period, when we buy an asset, we hold it for its life. That's the plan. Now, can we sell it? Absolutely. But unlike real estate, we don't make a projection that we're going to sell it for some pop 3 or 5 years from now. We don't know. So we assume in our modeled projections that we're going to hold it. That said, you own a security in the holding company, and you can sell your security to anyone anytime you want. Right now there's a 3-year holding period to hold your stock once you buy into one of these projects. And then after that point in time, you can sell your stock. And essentially, you're hopping off the dividend bus and somebody else is hopping on to replace you, but the project remains under our management. So hopefully that clears that up, makes that clear. Average ROI depends very much on those risk-adjusted markets. So in Brazil, we're seeing stuff in the low 20s. In the US, we're seeing stuff in the mid to upper single digits. In Japan, it's mid to upper single digits. In Africa, we're seeing upper teens. So if that gives you a sort of a lay of the land, those are sort of rough numbers, but that's about what we see, which makes sense to us. And then distribution structure, every month, we collect the money from the customer's payment. The first thing we do is we pay the plant's operating expenses. That's that operations and maintenance contract I mentioned. We pay for the insurance related to the company. There's an internet bill for each project so we can see the generation in real time. So some accounting at the end of the year. So we pay the plant's operating expenses, then 100% of what's left in the account gets drained and distributed pro rata to shareholders. So if you were to invest in the South Fernando Hydro project today, you'd get your first dividend next month. There are some portfolios that are under construction. So there would be a period where you make an investment, you're going to get an accretive yield on that. And then when the projects turn on, you'll step into the dividends on a monthly basis the same way.
Great, thank you, Mike. And that's just a very close, like speaking to how close you are to the actual investment. These people are paying their power bills just after the cost of the solar are taken care of. That's coming right to investors.
That's right. You own the plant.
Yeah,
you really do own the project.
We usually have 2 types of customers at Rocket Dollar. We have home run hitters, who they're just trying to smack home runs in any direction. And then we have yield investors, that just similar, real estate investors, they're trying to hit some certain level of yield for a certain level of risk. but they're usually trying to replace some type of bonds or, even some equity type products with a higher, more aggressive yield type. So Mike and Tyler, thank you so much for coming by, teaching us about renewable energy investments. We're going to get this recording up on YouTube. So anyone listening, feel free to pop that, send that to anyone. You can use code Energia, just the name. I don't have my slides up, but use that name for $50 off if you're still a prospective customer. You can throw that out to someone who's interested in investing with renewables. Thank you, everyone. Let me just kill the recording right here. All right. Thank you
all for attending today. We really
Yep.
appreciate your time.
Thanks so much.